It's Monday. That means it's Setup Monday for Brave New Coin. And I can't really think of a more interesting time in crypto. Maybe during the BCH block size war. That was pretty interesting. Mt. Gox, obviously interesting and ongoing. This is a decade shift in what's going on with BTC in the China arena. For the first time in a big way, it looks like China's legitimately banning anything to do with crypto, likely to pave the way for their own CBDC crypto alternative, which will eventually be mainstream for them. They've always been more digital payment friendly. There's this great video of this like 5-year-old kid going to some convenience store and paying with their watch like it's nothing. It's just amazing. A lot of places around the world. New Zealand even has this tap and go thing. I forget what it's called, contactless, I think. We don't have that in the US for the most part, as mainstream as they do. So we're kind of behind the times in that regard. So anyway, we're at a major shift here. Even central bank digital currency is coming for the US eventually, seeing more and more rumblings of that. But if we start with the evidence of the upheaval in China, look no further than the difficulty adjustment. So this will increase in between the adjustments, which happen about every 2 weeks. At least they should happen about every 2 weeks. This will increase if hash rate is increasing and decrease if hash rate is decreasing. And this is the biggest single negative adjustment, I think, ever, and probably the biggest string of negative difficulty adjustments ever. This isn't just China, however, because if price is in the decline, as it has since 60K, we're basically 50% off the top. That's going to affect hash rate dramatically as well. So it's not just China. I don't think we'll know until the dust settles exactly how much of the network has shifted from institutional China players to China players being geographically elsewhere. But it's about 50% from the top as far as difficulty is concerned. And that's going to affect a ton of metrics. It's going to affect everything. Hash rate is kind of like the base layer of how all the other metrics function. First order, second order, third order. We can look at on-chain metrics. All of those are dramatically going to get sloshed around until this stabilizes. So we can look at Bitcoin's transaction count and active addresses, both of which are down substantially. Active addresses down 30% plus, transaction counts down from January 15 to 20%. So anytime you see this in a vacuum, you're like, okay, all right, if I'm on my deserted island, I have no clue what's going on with China. This is how I have to sort of split my brain in half and look at the data and look at the news, right? Because the news isn't always factual. It isn't always the whole story. We don't always know what's going on, but the data is going to tell us what's happening on chain. And like I said, first of all, that's obviously problematic. Okay, there's a string of them. Now what's next, right? Hash rate is going to affect everything. Transaction counts down, active addresses down. That's just for BTC. If we look at ETH though, ETH's transaction counts and active addresses have started to curl up. So it's easier to get a little more bullish on ETH from a fundamental perspective than BTC based on that alone. This says at least people are starting to come back to the table. And I have some other stuff I'll look at in a second. But this is what I want to see for BTC once the hash rate stuff gets figured out. I want to see these metrics curling up again versus just declining swiftly. And something else that's affected by hash rate and difficulty is issuance. And we basically had another halving in issuance. Now this is going to right the ship in about a week's time when that retargeting goes back to 10 minutes. But in the near term, we are going from 2% inflation to sub 1% inflation, which is an all-time low for BTC. So miners are getting paid in coin the least they've ever gotten paid per day, which just decreases supply pressure, sell side supply pressure, fundamentally. ETH's hash rate has also declined significantly. I don't see too many people talking about this. Again, price will affect this dramatically because as price declines, the block reward notionally declines, and then you get miners who are no longer profitable if they are running on considerable electricity costs, like 10 to 12 cents per kilowatt hour instead of 4 cents per kilowatt hour, right? It just squeezes out anybody who isn't extremely efficient. Because if they were mining with the assumption that price is X and price drops 50%, then they're probably no longer profitable. So hash rate hasn't dropped as substantially as BTC's hash rate has dropped, but it's dropped considerably since the highs, obviously. So China probably plays a subtle role here, but price is probably the bigger issue for Ethereum. And then back to BTC, block times, the highest in a decade, almost above 25 minutes. And if things were ultra volatile to the downside, we usually have major issues because you get these rolling liquidation spikes when these block times confirm. Because let's say you're going to capitulate and panic and your coins are in your cold storage, you have to send them to an exchange, right? And it's going to take 6 times the number of block times, 6 times the block time to confirm in the exchange. So that may take 3 hours, right? Let's say it takes 3 hours to send instead of 30 minutes to an hour, right, to confirm. Sometimes it's sooner than that, but on average, let's say it's 3 hours. Then you get these rolling liquidations. We saw this a little bit. I forget when it was. I think probably sometime in 2017. But anytime you get high block times, higher than usual, it's definitely an issue for price if there's significant volatility. Luckily, we're going up. There's upward volatility instead of downward volatility, but that's always a concern. So because block times are the highest they've been in a decade, issuance is way down. And that's going to affect things like Puel multiples. So if you're looking at this stuff thinking, man, this is a massive buy. This looks the best it's looked since basically Corona March or thereabouts, right? Well, yes, but also there's more to the story here. China is just, can't say it enough. Not only in the mining front, but in the trading front, OKEX, Huobi, Binance, banning derivatives, not yet banning spot trading, but very likely that's coming soon. The UK is clamping down on Binance. Everybody and their mother in a 3-letter agency in every country in the world is looking at crypto right now, probably panicking, saying we have to do something, we have to do something. KYC AML is probably coming for DeFi in the UK as well eventually. How that'll affect things, I don't know. We can be crypto purists and say it'll be fine, it doesn't matter, it's irrelevant, it's decentralized. You can say that, but at the same time, that's going to, if you use this stuff without KYC AML in that country, then they're probably going to make your life a living hell. That's my guess, is how they're actually going to regulate this stuff, whether it's taxes or something. I don't know, I don't know, but I don't have a good feeling about that. All right, if we look at price, this is the most bearish scenario for BTC, is this downward sigh banana situation where we just kind of puke out the bottom. If there's some mass capitulation event, we just quickly puke 10K lower, right? At that point, I think most people become a buyer. The issue with that is we have funding flipping, was negative, flipping back to neutral. Massive, not massive really, but bull div is growing. We're getting lower lows on less and less bearish momentum. And we're still hovering in this multi-year pitchfork median line, so things are sort of as expected as far as rate of change is concerned. It's 50-50 one way or the other right here. We're below the cloud, but we're also pretty heavily in this TKC clamp situation where it's telling you we're oversold here. And this could, like it did here, we had a overbought conditions with the Tenkin and Kijun. This could keep going, right? The first thing this suggests is that the trend will likely slow, will likely go sideways. The next thing it suggests is a potential mean reversion. Now, if we break the Tenkin, which we already tried once and failed at the 200, but if we break the Tenkin, this blue line here, which you can't really see, but it's there, then it says, okay, we're probably going to hit this red line, which is at 45. So in general, I don't hate a mean reversion play to 45. Over the past week, I've just been looking at this chart every couple hours saying, okay, are we out of this bearish pitchfork yet? No? Okay, I do nothing. Are we above this 200 period moving average on the 4-hour? Are we above this VPVR? Are we above the yearly pivot? Are we out of this range? Are we above the cloud? Right? This is the checklist of things you can go through. How bullish are we? How much do I want to add? Do I want to buy yet? Do I think this is going to go anywhere? I think the biggest resistance that we have is probably back to this range at 40-42. VPVR doesn't really agree with me. because it suggests mega resistance between 35 to 38, along with the pivot and the 200 moving average here on the 4 hour. Let's say we're through all of that. Then I can say, all right, 45 looks pretty good. You know, as it is, if we break this Tenkin at 35, which we're starting to today, we'll cancel out this nonsense, right? This falling wedge banana thing, whatever you want to call it. We'll cancel that out. We'll start our mean reversion. We got the 200-day moving average up here at around 39 to deal with. So there's a lot of things we need to cut through before we get complete mean reversion potential. But don't confuse mean reversion for meat is back on the menu, bull trend is starting again, because that's not until 50K, at least probably 49.5 or whatever this is on the cloud. Until we're back above the cloud, back above the 200, everything from here on out is just mean reversion and nothing more. We also have quarterly rollover, which Q3 has never been, I won't say never been bullish, but on average it's basically zero. It opens and closes at the same level. This is the worst Q2 we've ever had, so that may change things, but all of this stuff is what I'm thinking about this week. You know, do I want to enter a position in a quarterly rollover week? Not really, even though CME already rolled over. Do I want to enter a big position when the difficulty is adjusting and China's getting angry with crypto? Not really. You know, I want to see the dust settle a little bit before I get more confident. Can you buy like stuff like ETH or BTC based on Adam and Eve potential on low time frames? Sure, I think that's fine. ETH to 24 is possible. This is the 4 hour 200 period moving average. It's still far below that. It's still far below 28, which was the horizontal on this previous breakdown. So we just have a lot of little things on the way up to sort of be convinced. Here's even the 8 hour BTC. We're not above the cloud yet. And it doesn't matter the ticker or the time frame. But if you're watching a trend and it is basically binary, which in the 8 hour it basically has been, it's either been above or below the cloud. It hasn't really been wishy-washy except end of April. But what you're waiting for, if you to get super confident, is above VPVR, above the cloud, above the 8 hour moving average, the 200. Just pick something, right? Doesn't matter. That's what I'm really waiting for to get confident that this mean reversion can actually have legs. DeFi perp sold off extremely hard over the past week, which is a amalgam. That's an index of DeFi stuff. So it's still far below the VPVR range. It's exceeded even this falling wedge potential. It has put in a partial bull div in that you're getting lower lows on equal momentum. So that is a bull div. Volumes have started to pick up slightly. We sort of tapped the monthly pivot, sorry. So there are some things that are looking better. Ultimately, for everything in DeFi, I want to see it retrace to January. That's when I'd get more confident that, okay, this is actually capitulation. Everybody who's bought since January, on aggregate, if this retraces to like 2,800, has zeroed out any gains they've made, right? Like, that's what I want to see, to be 100% sure. Because we're still setting up for a death cross here, which hasn't even happened yet. So ultimately, again, this is just mean reversion to 8,000, 8,200, something like that. There's some things though, like Aave, it doesn't matter the time frame. I'm mainly just looking at this moving average multiplier historically. So Aave is dipping into the buy zone. Now this may last, I don't know, 6 months, 12 months, 18 months, right? We may be in the buy zone on this for 18 months. This is the half year MA or something down here. But you can very clearly see sell zone up here, buy zone down here, and we're getting into the buy zone again. So if this does have another leg to it, right? The first one was 62, the next one was 500, the next one's going to be 1,800. You know, that's pretty good upside. It's basically 50% downside based on the DeFi perp. In general, everything can go another 50%. BTC to 20, ETH to 1,000 or less, you know, whatever it is. Aave to 100, right? The last breakout, or the last all-time high. So that's your downside. If you're comfortable with that, then yeah, you know, this is telling you to start to DCA in. If you're comfortable with Aave not getting destroyed by KYC AML requirements, probably coming globally for this stuff, sure. SNX, if you're comfortable with the platform and the user base and all the issues going on with whatever's going on with SNX, most of it's FUD, some of it's true, I don't know. This is telling you to buy as well. This is the 1 year MA. So 730 divided by 2 because it's the 12 hour. So again, it's telling you buy zone, buy zone. It's gone from 30 to 7. I mean, that's a massive, massive drawdown. That's more than just the market, obviously. Then now this has retraced all of its January spike up. This has, I think comp is coming close to that as well. So there's some DeFi dumpster diving that you could do and just say, this could just mean revert because it's sold off so hard. A few other things I want to talk about. Grayscale discount on ETH and BTC products, or ETH and BTC products, is shrinking, going closer to spot, closer to a premium. This continually has unlocks every 3 to 6 months based on when people bought the prior year, 6 months. But as a sentiment gauge, the more this goes closer to spot, the better. And it looks like unlocks have started on LTC because that was at like 900+% premium just last week, and that's down to 650 or so. So ultimately this LTC premium is going to go negative, right? It's only a matter of time because of how the unlocks work. And that's important to understand for BTC and ETH. What are the unlocks that are left? The reason these are important to pay attention to is because they're so ginormous notionally, nominally, and also gauge institutional sentiment. Funding rates, like I mentioned, which were extremely high. If we take out Bybit, sorry, look at everybody else but Bybit. Funding rates on derivatives since January were kind of 20%, 10%. They got close to zero, but they never went negative. So currently they're negative and flipping back to neutral, like I mentioned. So it's rare that they go negative and stay negative for so long, but that helps add to the mean reversion reset scenario. Coinbase bumped up today, another sort of institutional sentiment indicator. MSTR bumped up today as well. Gas rising. DeFi borrow rates, lending rates on USDC and DAI slowly creeping up painfully. So if we're risk on crypto, I expect funding rates on derivatives to increase. I expect lending rates on stablecoins to increase. I expect gas to increase. I expect stuff like Yearn's TVL, I expect this to decline because if yield farming is sort of risk off, more so than risk on, maybe that's an incorrect read, but Yearn's TVL exploded and a lot of this is incentives, so it's not a clean read on this, but if we're trying to figure out the risk on, risk off slider, I don't want stablecoin lending rates declining if we're risk on. And then lastly, Doge is still on the 2-year MA multiplier. It is still in the overbought camp here at a nickel. Now the ultimate pain would be if this jumps another 1,000% to $2, completing a third drive. That would just be hysterically bad, I think, for crypto in general. We need stuff like Doge to retrace significantly in order for me to feel comfortable that the speculative mania is died down a little bit. That would basically be 5 cents or less for Doge, which is a pretty big drop from here. And then the DXY chart is another thing to watch this week. How does Bitcoin react if this thing goes higher? If DXY doesn't go higher, how does Bitcoin react, right? Like, it's done a bunch of nothing over the past couple days. But if this thing actually starts moving, which it may move lower as stocks move higher, that'll be beneficial for the crypto bulls. But ultimately, it's all about China right now. Lastly, I'll just mention the ETH-BTC fund and DeFi portfolio I trade for Techemy Capital on Enzyme.finance, non-custodial portfolio management tool. You can send ETH or USDC or just watch what I'm doing. It goes into a smart contract and then basically allows a similar to copy trading mechanic. Some people were asking why the price was all over the place on the share price here. A lot of that has to do with the Oracle stuff for Aave USDC and just the website subgraph I think they use. It's not the greatest. It's better to look at this on Xerion, honestly. And if anything, they should just put a Xerion link in here. But anyway, all this is transparent. You can see everything I'm doing. You can see my trades. You can see deposits, withdrawals. You can see when I'm lending, how much I'm lending. You can see I've basically done nothing since the 21st. Previously, I had attempted to buy that range, assuming a breakout. It didn't break the range. And from then on, I've just sat here on my hands sort of waiting for a decent signal. And the DeFi stuff, I just had to cut it because it was headed to zero rather quickly, considering we started this thing in April. We didn't have a lot of upside to play around with. You know, if you're up 200% on something, then arguably you can hold that drawdown more significantly. You know, obviously you want to hold on to profits, but we were only ever up at a max around 15%. So when we got slaughtered on mid-May for holding all this stuff, the tolerance for continuing to hold lower lows just gets smaller and smaller, right? So that's all for this one. Like, dislike, comment, share, subscribe, and happy trading.